Thank you, Mr. Chairman. Mr. Chairman, I'd just like to start by saying that I think the President of the United States has made 5 very strong choices, and I particularly want to say he's made a strong choice with Congressman Mel Watt to be the permanent head of the FHFA. I worked with Congressman Watt many years, starting many years before the financial crisis, on a number of housing-related economic issues. He has always been a thoughtful policymaker. He has a deep background in finance. He has been a champion of working families. There is much work still needed to stabilize the housing market, and FHFA is going to play an important role in that. And so I very much hope that we will not succumb to political bickering, that we will confirm a truly excellent candidate for this role. So that is my only question for Congressman Watt. Should I say, do you agree with me?
I just want to say thank you, and I was hoping that I would not deflect from the rest of the panel the entire day. So
There we go. There we go. But I do have a question for Mr. Piwowar and Ms. Stein. We have talked in this committee before about understanding how important it is for the SEC and other agencies to settle with companies that have engaged in wrongdoing. But we also understand that if the SEC does not go to trial and does not require admissions of guilt, either because it is too timid or because it lacks the resources, that they will have less leverage in their settlements. And now we know that Chairman White has said that the SEC will require admissions of guilt in select enforcement cases. I think this is a very important step. I think this indicates that the SEC will show some backbone in critical cases, and I think that has important benefits, spillover effects, even in other cases, in helping create some credibility behind any SEC's threat to go to litigation. So the question I have, and I'll just start with you, Mr. Piwowar, do you agree with Chairman White's new policies here?
Absolutely. The no admit, no deny policy seem to be on autopilot, and by definition, enforcement cases should be on a case-by-case basis. So I was pleased to see that she said that, you know, in some cases it is appropriate, in other cases it's not. They have to be dealt with on a case-by-case basis.
Fair enough, but that she is making an important change here. Thank you. And Ms. Stein?
I would agree. I think it's, I'm supportive of the policy change, and I think that the SEC should use all of the tools it has at its disposal to enforce the federal securities laws. Nothing should be on automatic pilot.
Good. Thank you very much. I think that's very important. I think that Chairman White is onto something really important here, and I hope other regulators are paying attention to the changes that she's instituting. You know, every district attorney and every U.S. attorney knows that plea bargainings will break down and have no real impact if, in fact, the government is unwilling to go to trial. So I think this is true. I hope that the other agencies follow suit, and I hope that we follow up. It's important that everyone know when we're talking about litigation that you don't have to have a perfect record. We can tolerate sometimes you'll bring someone to trial and you may not succeed, but you're out there trying. It's important. Thank you. Good. Dr. Furman, I have a question for you. We've also spent a lot of time in the Banking Committee talking about too big to fail, and I think I understand the policy of the administration right now. Chairman Bernanke has said too big to fail is not yet in the rearview mirror, and he and others in the administration have said, but Dodd-Frank is chipping away at the too big to fail system that we have right now. But we also know that a recent study has indicated that the big banks are receiving a subsidy of about $83 billion a year in lowered borrowing costs because the market believes that too big to fail is still out there. And that's a subsidy that boosts big banks over community banks in terms of attracting capital. So my question is one about timing, Dr. Furman. I understand the point the administration's making, but it's now been almost 5 years since the financial crisis, 3 years since we put Dodd-Frank into place. So at what point will we determine whether or not these tools are sufficient or it's time to do more, like instituting Glass-Steagall? Do we wait a year, 2 years? What do you think, Dr. Furman?
Thank you for that question. I think what you'd want to see is very steady progress and ideally rapid progress. As Senator Bernanke has said to you in this committee, too big to fail is over. The Federal Reserve would not be bailing out an institution. You are right that the market continues to have a perception that there is, the credit rating agencies, for example, that there is some backstop there. It's important to understand markets can be wrong. They might have that perception, but that perception isn't matched in reality. Part of what policy needs to do is continue that implementation of Dodd-Frank, everything from the capital requirements, the supervision, the reduced risk-taking, and the resolution authority, so that you're making it crystal clear that that perception is wrong. But at the same time, I agree we would need to continue to monitor the data on things like the funding premium for large, complex, risky institutions.
Good. Thank you very much, Dr. Furman. And Mr. Metsger, the only thing I would ask is, did you keep that 57 Chevy that you bought with the credit union money? It's a great investment now.
Well, it would certainly be worth 60 to 70 times more now, so my long-term investing decision wasn't very wise on that one.
Thank you. Thank you, Mr. Chairman.